Alright guys, so big things are happening today. We are at a dangerous turning point where the global situation, this broken economy could start to get better or just crash into chaos. We are starting to see signs that the Ukraine conflict can't drag on further. Then on the economic front, we are seeing disinflation kick in. The Federal Reserve has finally signaled rate cuts are coming. But on the horizon, a big economy has suddenly crashed into contraction. So this insanity is far from over. And let's talk about Russia and Ukraine first because the outcome is becoming a nightmare for the West. Putin is vowing ultimate victory in the war. This is a level of confidence we haven't seen since the start of the entire conflict. During a news conference, he made some critical statements that we must analyze. It tells us a lot about how Russian resolve is and how the West is starting to fall back. Zelensky isn't getting his money, and Biden, he's in a big quagmire with House Republicans. So Putin is pushing ahead with the advantage. There will only be peace when Russia achieves their goals. And the biggest ones are the demilitarization of Ukraine and its neutral status. And if these aren't met, Russia will continue the battle until the bitter end. So we know what the big terms and conditions will be. There is no room for negotiation. Ukraine will have to remove their military from the disputed area, and they won't be allowed to join NATO. These are going to be the big conditions above all. Now, this second statement is groundbreaking and it concerns relations with the West. Russia is willing to restore full-fledged relations with the United States, but the time isn't right for that yet. The Ukraine conflict has to end before any relations are restored. But there's a bigger clue hidden in the message. Putin isn't interested in shaking hands with Joe Biden. He might be waiting for Trump victory in 2024 before the tides start to shift. Putin confirms this in a follow-up statement, which at least to me are concrete steps that Russia wants to see. Firstly, they are waiting for eternal changes in the US, back to the Trump victory that we mentioned earlier. Secondly, Russia's waiting for a shift away from the current US policy, specifically looking for compromise instead of using sanctions and military intervention. Only then will Russia restore full relations, and I think we all agree that this is a gigantic leap for the Biden administration to take. It's not going to happen until 2024 at the very least. What's fun is how Russia didn't really talk much about Europe. Putin's attitude is basically, if they come, they come. There isn't a big sense of urgency for Russia to embrace Europe again, and this chart says it all. Russia is now effectively decoupled from Europe, especially in their oil revenues. Just look at the data. Before the war, Northern Europe was Russia's biggest customer, making up more than 50% of crude demand. But today, Russian crude is now flowing to Asia, countries like China and India. In fact, the total volume of crude leaving Russia has not changed. Exports are well above 3 million barrels a day, higher than even the pre-war levels. So it's no surprise that Putin has a take it or leave it attitude with Europe. But I want to touch on a few big economic realities that won't change. Restoring relations with the West doesn't mean it will be business as usual. Things are forever different. Even if the United States or Europe drops all the sanctions on Russia tomorrow, the damage has already been done. The moment the West froze Russian reserves, they imposed the oil price cap, they effectively severed any semblance of normal trade relations anymore. And Putin is voicing this out. During the news conference, he was asked about what advice he would give to his younger self, right? And his reply tells us that Russia they'll always be on their guard against the West. He would warn his younger self against being naive and overly trusting towards so-called partners. Well, it's mighty obvious who he's talking about, right? He's referring to the West, especially Europe. Putin is having flashback to the Minsk agreement and the promise of NATO halting their expansion. He probably recalled the famous "not 1 inch to the east" promise made to Gorbachev. America's James Baker made the promise back in 1990 to end the Cold War, and it's obvious how well those turned out. Now, those are just the political promises, but let's analyze the financial impacts of the last 18 months. Because of all the commodity sanctions and America weaponizing the dollar, Russia will always be on guard again. This is going to change the global economy. The EU has officially drafted a proposal to use the sanctioned Russian assets for Ukraine. Even the IMF is warning against this, but it will likely go ahead. In total, they'll be taxing the profits from the frozen reserves. The windfall tax will generate around 15 billion euros for Ukraine. Even if relations are restored with the West, don't expect Russia to buy Western assets again. Even if Europe returns all the Russian reserves tomorrow, I don't think it will fundamentally change this shift away from Western assets. It'll be a cold day in hell before you see Russian central bank buy US treasuries or euro bonds again, at least not in significant quantities. They will continue buying foreign currency like the Chinese yuan, and of course, Russia will be buying more physical gold to hold India votes as well. This isn't going to change even if Putin and Biden takes a picture together. And let's talk about oil for a bit as well. Because of all the oil price caps, Russia won't trust Western demand for oil anymore. They will continue to prioritize their volumes to Asia, especially China and India. In October, Russia sold oil to India at over $84 a barrel. That's $24 more than the price cap set by the G7. This is a clear indication that the oil sanctions have collapsed. It isn't constraining Russian revenues. Putin can now call the shots when it comes to oil exports, especially when it comes to trading with the West. He doesn't need to rely on Western vessels from the G7 anymore. We can see more than 70% of vessels transporting Russian crude aren't G7 insured ships, and the percentage will only continue to grow. Sanctions on ships are going to be less effective as time goes by. And this gives Russia enormous leverage when it comes to selling oil to the West. They can demand crazy terms such as 100% prepayment for oil. Russia might even force the West to transact in rubles or the Chinese yuan instead of dollars. That will be a slap in the face. This might be a snapshot into the future after the dust settles. So while Russia's economy isn't collapsing, another Western economy just crashed into contraction. Once again, we are seeing Europe take another punch in the gut. The lag effect of higher energy prices plus high interest rates are catching up. And this time it's the United Kingdom that is in trouble. In a not so shocking story, the British economy shrinks in October, signaling weak end to the year. This is the first time in July that all three main sectors in the UK contracted, and they are blaming it on the weather. The UK economy crashed because it was raining. Are you kidding me? You really can't make this stuff up. In October, the British economy contracted by 0.3%. The fall in GDP is across the board. It includes services, industrial production, and construction. So there's literally no bright spot in the UK economy. And here's the big issue. Q3 GDP had zero growth, in other words, economic stagnation, and Q4 is off to a bad start with October's figure of minus 0.3%. Unless a miracle happens, the UK might be entering a recession as early as Q1 next year, 2024. The problem with the UK is a double whammy of high inflation and high interest rates. They have the highest inflation rate of the entire G7 economies. The EU average is 2.4%, America is at around 3.1%, but the UK is at 4.6%, higher than the other Western economies. That is a huge gap which is going to prevent the Bank of England from cutting interest rates anytime soon. The Federal Reserve is planning to cut rates in 2024, but can the BOE do the same without reigniting inflation? That is the big question going around. According to the central bank, rate cuts aren't going to happen fast. They are leaving it unchanged at 5.25%, and it will stay there for an extended period of time. This sounds to me at least until Q2 2024 before they consider rate cuts. We can confirm this with the way the central bankers voted. 6 wanted to hold rates steady, but 3 of them wanted a further hike of 25 basis points. A third of the committee wanted rates to hit 5.5% because inflation is still a dire problem. The UK is essentially stuck in no man's land. The global economy is starting to slow down. Japan, China, and the United States are importing less, which is going to affect British exports as well. Then you stack on higher inflation and interest rates, they are squeezing consumers every single day. Domestic consumption is getting hammered while international buyers are shrinking back. Not a good sign for the British economy. According to traders, they are pricing in 100 basis points of rate cuts in 2024. They're expecting the Bank of England to cut rates aggressively next year. But I believe it's not because inflation is controlled, but because the country could tumble into a deep recession. This doesn't bode well for the global economy, guys. If the UK crashes, we'll see even more demand destruction when it comes to consumer imports. This is a very simple flow chart. A recession means people start losing their jobs. Job loss means no income and no money. No money means you cut down on spending, especially importing stuff from overseas. It's not rocket science here. This is why the coming Fed pivot is the dangerous one. By now, we kind of know what happened. The Federal Reserve has paused their rate hikes for 5 months in a row since July. The next step will be rate cuts and it's going to come in 2024. There's no denying this now. If we look at the Federal Reserve's dot plot, we can see their full intentions over the next 3 years. The average consensus for next year is an average Fed funds rate of 4.75%. That means at least 2 to 3 rate cuts are coming next year. Then the rate will continue coming down. It could hit 3.5% in 2025, 3% in 26, and 2.5% for the longer term. The big problem now is if the rate cuts are coming because inflation is controlled or because the economy is weak, the economy is in trouble. That's why this is the most dangerous pivot in history, because beneath the surface of this resilient economy, it isn't looking well. The underlying fundamentals are still very weak. Now, I want to state that I've been long the market since the lows in 2022, back when S&P fell to around 3,700 back last October, so I'm technically still up by 11% or so. I have no idea, guys, when US deficit spending will truly end. But there's a reason why I still have 40 to 50% of my money in money market funds, and I'm not exiting just yet, because history tells us that a recession is still on the cards. And here are two pieces of information that I want us to consider. Firstly, stock prices are in overbought territory. The S&P 500 has gone well above 4,700 and is almost going to challenge the all-time highs. That means investors, they are pricing in for perfection, that the economy is going to continue doing well. There is no soft landing, there's no hard landing coming. We are just going straight to the moon. Company earnings have to justify these insane valuations, or prices will start to crash back down if earnings start to collapse down due to consumer demand coming down. Then the price earnings ratio, or the PE, will readjust down as well. Now, I'm happy that the stock market rallied up, but at the same time, I'm very confused with this disconnect with reality. It's really disgusting, it's really bizarre. Secondly, we need to look at oil demand as well, which is a powerful indicator of the global economy. If oil demand continues to crash down, this means a global contraction is coming or is already here. The IEA has cut their Q4 demand growth by 400,000 barrels a day. There's now a sharper slowdown in oil consumption. This isn't good news for the US economy as well. Evidence of a slowdown in oil demand is mounting, and this reflects the deterioration in the macroeconomic climate. If the whole world starts to contract, if global demand drops, American companies will take a brutal hit as well. The S&P 500 isn't immune, they won't be spared. According to estimates, almost 30% of S&P revenues comes from overseas money. That's a big amount that is under threat from a collapsing global economy. Outside of the US, the big economies are slowing down fast. Japan, the UK, the EU, and even China, they are consuming less. So there's a real snowball effect coming for the United States. The market today is essentially priced for perfection. If anything comes in to shatter that story, things won't look pretty. And I'm not even factored in the commercial real estate crisis, as well as the companies rolling over their corporate debt. Those are basket cases that could implode everything as well. The only reason why the US economy is still standing today is because of endless deficit spending. The federal deficit this year was 6.4% of GDP. That's a crazy amount of borrowed money propping up the system. So America has to keep the spending up to prevent a collapse. But if the Ukraine funding stops, this could mean less money to prop up the system. Just listen to Anthony Blinken. 90% of the security assistance we've provided has been spent here in the US with our manufacturers, with our production. That means more American jobs and economic growth. So war spending is contributing to the US economy. It's artificial growth, but still growth in the short term. So if funding stops, then yes, Janet Yellen will be selling fewer bonds in the market. That allows yields to drop back down, and that's good for the economy. However, Blinken also has a good point. When funding stops, so does the money that's spent to artificially goose up the GDP numbers. Which effect is stronger, we have no idea yet. So I hope we can all take a measured approach, because this situation is getting murkier and it's getting more dangerous by the day. Putting all your eggs in one basket probably isn't a good idea. And going forward, things are going to get more chaotic. Russia and China, they are all coming together to forge a new world. We are on the brink of a new multipolar future. But let me know what you think in the comments below. Why is Russia so confident today? And is the US economy going to keep flying high? Or will we have a crash landing? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.